In this section, we're going to do a refresher on the financial statements. Now, you may already understand financial statements, and if so, feel free to skip. But I will say that this section is extra important in setting up a three-statement model. Before you can connect all three statements, you really need to understand the details of how they function, what their purpose is, and more importantly, how they're connected. So let's start with what exactly are financial statements. Financial statements are the way in which the financial health of a company is communicated. Now, just like when you go to the doctor and you get a lab result showing your physical health, your financial statements will showcase your financial health. And it's the uniform way in which this financial data is communicated to investors, shareholders, management, or even employees. When you hear the term financial statements, the three most common reports that will be included in this phrase are the income statement, or profit and loss, the balance sheet, or sometimes called the statement of position, and the statement of cash flows. Now, the other two financial statements that technically can also be included are the notes to the financial statements and the statement of changes in equity. But it's really rare that when you hear of the term financial statements, it includes these two. And we'll be focusing on just those three financial statements that we spoke about. Financial statements get produced via the accounting team. As an overview, the typical process involves collecting all of your source transactions. So this can be whenever transactions hit your bank account, or you receive a bill from a vendor, or you send an invoice to a customer. You then classify that information based off of your chart of accounts. Your chart of accounts are the accounts that actually show up on your profit and loss and balance sheet. Aside from categorizing the information, you may also choose a department or a class, which is an extra dimension that you can run in order to understand, let's say, your profit and loss for the sales department instead of the general and administrative department. After that information is then classified, you'll reconcile the information by collecting your bank statement and credit card statement and verifying that the balances in your accounting software match. From there, you may then book what's known as adjusting journal entries. Those adjusting journal entries are especially relevant under accrual accounting, which we'll talk about shortly. And they help you increase or decrease the values that show up on your profit and loss and balance sheet in order to more accurately reflect what's happening in your business. Once the financial statements are produced, you then can roll forward and integrate them into your financial model. So although you may not be working on producing financial statements, like we spoke about earlier, the more that you understand about accounting fundamentals, and in this case, how financial statements get produced, the more defensible your budgets can become. And when you understand all there is to know about financial statements, you'll unlock some really strong career opportunities. You'll be able to build a three-statement model, as we'll do shortly. You'll be able to understand your own business much better, or perhaps evaluate another business in order to acquire or make some sort of investment. And most importantly, you'll be able to just make more informed business decisions. And now that we're familiar with what exactly financial statements are, let's dive into probably what is the most popular financial statement, the profit and loss.